is that if you bought a house for £10,000 and owned it for 50 years and it went up to £100,000, there was an element of inflation in that price rise. It wasn't just a capital appreciation; it was inflation price rise. So capital gains tax was charged on the real gain, not the inflated gain. So that was an important distinction. So if you're in inflationary times and the property price goes from 10,000 to 50,000, there'd be no capital gains tax to pay. But if you sold it for 100 because of the capital appreciation, you pay the capital gains on the difference between the 50 and the 100,000. So that's all very well until Gordon Brown came along 20 years later and abolished indexation on capital gains tax. So now we have this situation where if you buy a property for 100,000 in the UK and you sell it for 200,000, you pay your capital gains on that whole gain. So you're stuck with it. Whatever you make in cash terms, you're going to get a cash capital gains tax, and that is a bit unfair. Now, if you want to start changing and radicalising capital gains tax, as we're looking at and examining at here, one thing to make it look good for the PR for Mr. Starmer's government is you could reintroduce inflation indexation for capital gains, at least to make it a fair tax. And the thing is that inflation proofing, if it was introduced from 2000, from the time of the next budget, it wouldn't have an immediate impact on the tax take they're going to get in the next few years. The impact will be in the longer term. So it's something that could easily sell to reintroduce the index linking, removed by Gordon Brown.